Before we begin, I want you to picture this with me. You come here to our office in Atlanta at the Trading Channel, and I sit you down at a desk. It's a 4-monitor setup. There's red and green candlesticks flashing everywhere at this desk. And I tell you, you now have access to a $100,000 trading account. And any bit of profits that you make today, you get to keep. One twist. Just before you start to trade, I walk up and I tie a blindfold around your eyes. Now, how likely, with that being the case, do you think it is for you to walk away from that trading desk with any type of profits? Pretty unlikely, right? Well, if you are trading pure price action without the knowledge that I'm going to share in this video today, then it's just like trying to trade with a blindfold on. So today I want to help you take that blindfold completely off, and I'm going to do that right after the intro and disclaimer. I'm going to share with you guys some of the best secrets that I have when it comes to price action trading. So if that sounds interesting, make sure you do 2 different things for me. 1, click the subscribe button down below the video to the right hand side, little red button, and the notification bell to be alerted when we come out with videos like this each week. Also, click the like button for me to help support the channel. Follow us on the socials, links are in the description, and I'll see you directly after the intro. So what is pure price action trading? Well, simply put, it's trading with no indicators. It's trading purely around price action. And there are 3 main factors that we're going to be looking at when trading pure price action. Those 3 factors are structure, trend, and candlestick patterns. And the most important thing when trading around price action and when trading in general is consistency. It's consistently placing trades based on the same reasoning every single time. And how do we do that? Consistency is created by rules. So if you want to know why a trader is successful, if you find a successful trader and you want to ask him about anything, I wouldn't ask him, what's your super secret system? I wouldn't ask him about his strategy. I would ask him, hey, what are your rules? Even for like simple situations such as trend or structure, what are your rules? Because the rules they use on a consistent basis is what's giving them that edge over the market. And the rules that we use is what I'm going to share with you today for pure price action trading. On the screen, you can see numbers, right? You've probably been wondering what this means. We're here on the Canada Yen 4-hour chart, and it says 66% chance of trend continuation based on my trend rules, 155 wins, 80 losses. What that means, I'm going to scroll back the chart a little bit here on the Canada Yen 4-hour chart, is that I have a 66% chance to see trend continuation on the Canada Yen 4-hour chart based on the rules I use for trend. This is with absolutely no indicators. All this is me knowing my numbers. In business terms, you hear that a lot. Know your numbers or your business will fail. Trading is a business. You have to know your numbers. My numbers for trend continuation are around 65 to 75% depending on the currency pair that I'm trading and the time frame. What that means is the rules I'm going to show you today, based on historical data throughout the past few years, have given about a 66% chance of success when it comes to trend continuation. So if I guess that a market, or estimated guess I guess you could call it, considering we've done our testing, that a market's going to continue in trend in a certain direction, then I know I have about a 66% chance on this specific currency pair and time frame of that happening. The red lines you see are when it did not work. This is when the trend continuation rules it failed, right? It didn't continue in trend when the market was telling me it should. And the black lines that you see are when this market actually did continue in trend. Now today I'm going to share with you the exact rules I use in order to give myself that 65 to 75% chance of correctly identifying the trend and the direction the market is going to go. Right? I have a 65 to 75% chance of knowing which direction the market will go. That is a huge benefit, as I'm sure you can already imagine, when it comes to trading. So let's break down the rules that I used in order to mark off each of these, and I'll show you guys exactly how to do this on your own charts as well, which will be highly beneficial, and it really does not take that long. It's not like backtesting a strategy. Doing this took me probably about 30-45 minutes here on the Canada Yen, so you could knock out a few pairs in just a few hours. But when it comes to the rules that I'm using in order to identify this trend, now is when you might want to get out a pad and a pen for some notes. Whenever identifying trends, it's a very, very simple process for me based on the rules that I use. I'm looking at a market, let's say, that's in an uptrend, right? there's that uptrend. Why is this an uptrend? For those of you who are new, it's an uptrend because we have a low right here, we have a high, we have a higher low, and then a higher high. This 3-point move, this 1 pullback 2, 3-point move tells me that we're in an uptrend. We've just broken above structure resistance. We've closed above that. Now we're in an uptrend. So what I'm looking for, and actually what I know is about 65 to 75% likely to happen, and we'll go 66 here on the Canada yen because that's what it actually tested. What is 66% likely to happen is once we have a pullback from this higher high right here, let's say of 2 candles pulling back, I know there is a 66% chance that this market breaks and closes above this resistance before breaking and closing below the previous lower low. Now, I hope that wasn't confusing. I can imagine that if this is your first time understanding or trying to understand trend continuation and trend in general, that might have got confusing. So I'm going to go over it one more time. If we have our 1, 2, 3 move at any point, and then we get a 2 candle pullback from our higher high, right here's that higher high. Why is it a higher high? Because it's higher than the previous high. If we get our higher high and we get a 2 candle pullback on the Canada yen based on these rules I'm about to share with you, I know I have a 66% chance of this market breaking into new structure highs. In other words, I have a 66% chance of trend continuation. Again, I'm sure you can see the value in having that knowledge. Now, what are these rules that give that 66% chance or 65 to 75% chance of trend continuation? They are very simple. Again, what we're looking at, again, is our swing levels. We're looking at our low, our high, our higher low, higher low, and our higher high. Now that we have all of these levels, let's say the market breaks into trend continuation right now. As soon as we break and close above our high, what I am looking for and making sure of is that the market does not close below this higher low. Right here is our higher low. What I want to make sure of is that the market does not close below this level. If the market closes below that level, then we're not in trend continuation, right? And if the market continues higher, then we are in trend continuation. But once we get this 2 candle pullback, what I'm saying here, and this is what confuses a lot of people, to avoid the noise the market is very likely to make in between these two, in between your higher high, which you know is a higher high, once we have that 2 candle pullback I'm talking about. So we get that 2 candle pullback, we then label this as our higher high. To avoid the noise that normally looks something like this, and once I show you this, you'll go, yeah, I've seen charts that look like that multiple times. This is what a chart normally looks like, right? We normally have something like this in through here. What I'm saying is that no matter what happens right here, all of this is considered noise in my opinion, unless we break below this higher low. If we don't, then we're still in trend continuation. I still have a 66% chance of this market breaking into higher highs. I still have that 66% chance no matter what happens in between here, as long as we don't close below this higher low. And those are the rules that I use for trend in every situation, on every time frame, and on every currency pair, even in every financial market. I use this in the stock market as well. And this is what I've used to give myself an advantage and to give myself an actual statistical advantage, having a 65 to 75% chance of being correct when it comes to identifying a trend and a direction that a market's likely to go. Because a lot of times, this is what I see, most people that are teaching trading show you charts that look like this, and they tell you how to read trend with a chart that looks like this. How often do you see a chart that looks like this? Not very often, right? 90% of the time, a chart looks something like this right here, and we do a lot of consolidating in this right here. Now, can you read a trend on this chart? Yeah, but it's a lot harder, right? But what if we just point out our lows and highs, right? We have this low, we have this high, we have this as our higher low, we have this as our higher high, higher low, higher high. I'm going to keep doing this. I know it's probably getting repetitive. I'm sorry, but I'm a little OCD, so I have to keep doing it. And finally finished. So at this point, when we're connecting the lines, instead of having all of this noise, what we're looking at is the blue line. We're going low to high, higher low, higher high, higher low, higher high, higher low, higher high. We're avoiding the noise in between by reading markets like this. And that's exactly what I wanted to do with my trend continuation rules, and it's exactly what I've done here. So that's exactly how we're going to be reading trend when it comes to structure. The most important level of structure, we've talked about this multiple times. This video is no different, no exception whatsoever. We have our ways of identifying our trend no matter what happens in between, right? This right here would be our low that we can't break below. No matter what happens in between, we know we have a higher likelihood of this market breaking and closing above the resistance than breaking and closing below our higher low here. So what we do in this case, after we break above, let's say we break above it, our most important level of structure is always going to be that previous resistance that's broken. If we break it with some impulsiveness, if we break it with some distance, right? If we have some distance pushing up, then we can wait on that pullback into that resistance. That's going to be our most important level of structure. Second most important is going to be the higher low. So we're either looking for entries there or entries here. This is how we're trading based around price action. Complete pure price action, no indicators. It's looking for those rules that we have for trend continuation, then looking for the most important levels of structure. And I'm going to show you examples of this on the chart in just a second here on the candidate again. So this is what we're looking at. Let's actually go to the chart now. We'll go ahead and take a look at this, take a look at a couple of examples of this from the beginning of time, at least here on the 4-hour chart, the beginning of time, which I think is a few years back. I'll go ahead and scroll. These that you see on the screen is actually a strategy I'm testing. We're going to include in the EAP for those of you who are members. But what we'll do for now is just show you guys exactly what I'm talking about with our black lines. So our black lines, as you can see, for instance, this is a great example of what I'm talking about. Right here, you can see a lot of noise, right? This right here, a lot of traders would be like, well, what does this mean? Is this now a new high? And is this our new low? No, this is still our higher low because this resistance hasn't been broken. So this becomes our high. We push up. We push back down. A lot of traders will be like, what about this little period of consolidation in here? What does that mean? It's noise in the market. It means nothing to me until we get that break above resistance. Now we get another break above resistance. And what are we looking for every time we break resistance? We're making sure the market doesn't break our higher low, which is defined by the rules we just talked about. Now, when it comes to pure price action trading, we're going to combine a lot of things, right? We're combining the structure levels we just discussed with the way of reading trend that we just discussed. If I get past all of my lines here and we talk about it starting from this level. Okay, so here we have our move up. This is our one. This would be one. That little pullback right there, that little 2 candle pullback would be 2. This would be 3. Now we're in an uptrend. Okay, we're trending. What are we looking for in a trending market? We're waiting on a pullback to our previous level of resistance. Do we get that right here? No, we do not. So next up, we get another push up that breaks and closes above our previous higher high. What does that mean? That means trend continuation. Now what are we looking for? Well, we don't have a very big push above this resistance level. That's what I was talking about earlier. If we had a big push like this, we'd be looking for a pullback to this resistance level, right? And then a continuation of the trend. But we don't get a big push. We end up getting a situation where it barely closes above that level. So what we're looking at in that case is our previous level of support, our previous higher low to be our major level of structure. And that in fact becomes the case, right? We have that pullback into that level, we get trend continuation. Now this, a little bit bigger of a move, right? A little bit bigger of a break of that resistance level. What are we looking for next? A pullback into our previous level of resistance. We get that. And then the market continues in trend. Now, we're going to continue this process. As we can see right here, we get another situation where the market breaks and closes. We pull back, we break and close again. We don't get any type of entry reason right here at previous resistance, but the market comes down. What's it come to? Previous support, our previous higher low, and then we get supported by the market. Now, when it comes to pure price action trading, that was fantastic. My entire camera just fell, so that's awesome. At least it didn't break though. When it comes to pure price action trading, what we're looking at specifically right here, right? Let me actually, to make this a little easier for you guys to see, I'll delete most of this. Okay, so right here is a great example of what we're looking for. Our key setup for purely trading around price action looks exactly like this. The key setup we're looking for, we're using the rules I just showed you in order to identify trend. And that's going to take practice, guys. There's nothing that you're going to be able to just get really, really quickly when it comes to trading, when it comes to reading trend, understanding structure. So it's going to take practice. Go through the markets, do exactly as I've done here on this chart. Draw black lines for every, or any color lines, draw lines every swing low to swing high, your higher low, your higher high. Draw lines on them to make sure you really understand how to read trend correctly. Now, in this specific case right here, what we're looking at is the break above this previous resistance level. Then we get a pullback. This is one of our perfect scenarios. Not necessarily right here. I hope you understand what I'm saying when I say this. We didn't actually touch it, so it's not really a perfect scenario. But if we would have come down and touched our blue line and then got a candlestick entry pattern of any kind, that would be a perfect setup for pure price action trading using the trend rules we've talked about and the structure rules we've talked about. Right here, another perfect example, and this actually is a perfect example of this. Right here, we have our move up, a move down, and our 1, 2, 3 move bringing us into trend continuation right here. What do we look for after that? Well, we're looking for a pullback either into this resistance level, which we get right in here, or a pullback into our previous support level like we talked about. That pullback into previous support ends with an engulfing candle right here, and then the market takes off to the upside. That is an optimal setup for pure price action trading. We have a market in trend based around the rules we use consistently. We have that market in trend. We have a market down at a previous structure level. The only two levels we're paying attention to is our previous resistance level, which is right here, our previous higher high, and our higher low. Those are the only two levels we're paying attention to. If we have a situation where a market's doing this, we're not paying attention here for trading opportunities. Here, here, here. We're not paying attention to any of those. We're paying attention right here, and that's it. Just those two levels. Those are our optimal levels. This is our perfect trade for pure price action trading. At those levels, we're looking for specific candlestick entry patterns. And we'll actually go to one more example before I end today's video. Hopefully it's already brought you a lot of value. If so, make sure you go ahead and click that like button. Make sure you're subscribed here as well. We come out with videos like this each and every week. Let's go find one that's like a little more complicated, not such a perfect scenario. I don't like sharing only perfect scenarios because the market's not perfect. You're not going to run into perfect scenarios all the time when trading. Not even close. So here is a really good example, right? So right here we have a really strange situation, and let's actually discuss this. I'm gonna take the black lines off to make this a little better. And sorry, I got the sniffles, guys. I've been dealing with the flu throughout the majority of the Christmas and New Year's break, unfortunately. Let's go ahead and take all of those off. And now this is one of those situations that I was talking about earlier that most people that teach trading aren't gonna show you. But this is a very common situation, right? Something like this right here. How do you read trend in this area, in this situation right here? Now what, right? Most trading educators are just going to leave you at good luck during these situations, but that's not what I want to do at all. You see, this is a very great example of why I have such set in stone rules for trend continuation and for trending markets in general. Here's the reason. Right here, I can tell you exactly what this market's doing. I know it looks like consolidation, but I can tell you that I have a 66% chance that the market continues higher and not lower. I can tell you that because I know that right here, we have followed my rules for trend continuation. If I draw a straight horizontal line, we barely closed above it, but we did close above it. When we do that, when we barely close above a resistance level, based on the other things you've learned in this video, what do we look for? We look for a pullback to the previous level of support. And that's exactly what we get, right? Right here is that pullback. Now, what's next? All this shit, right? This is next. That looks awful. What is this, an uptrend inside of an uptrend? And then we break more resistance levels right here? Well, not if you've been paying attention. If you've been paying attention, then you know, if we draw our black line on the screen here, that we have this move up that broke resistance. We then look at our next higher low, or in this case, equal low. Those two levels that I just pointed out, here and here, are the only two things that we are paying attention to. None of this even nothing else in here matters whatsoever. So now that we know that I'm paying attention here and here, what are we looking for? Well, I'm waiting to see, does this market close below this level or close above this level? Pretty easy, right? Pretty simple stuff. Well, if we close above this level, I know there's a 66% chance after doing this, closing above this level, that we continue in trend. And that's exactly what happened. So hopefully that makes it a lot easier to understand trending markets, even during periods of the market like this, where it seems almost impossible to understand trend. Because consistency, again, guys, is going to be a major part of your trading. So creating rules around trend, structure, and price action trading in general, if that's something you're going to do, is extremely important. The rules are what creates that consistency. This video has been me showing you the rules I use for trend continuation, for structure, and again, any type, test this. Don't go out and take my word for it. That's not what I'm saying. You're not going to get some kind of super secret system anywhere on YouTube in any course. It doesn't exist. No professional trader got there because they took the easy way out. No professional trader has ever found an easy way. The reason I'm able to explain this to you the way that I am is because I've tested this thousands of times in historical data, and I've put in the work, I've put in the effort. Your trading success will come down to the effort you put in. If you take what you just learned in this video and don't do anything with it, if you just go out and start trading randomly based on it, you're probably going to lose money. But if you take this information, you go test it through historical data, test it with different candlestick entry patterns at specific levels of structure like we just talked about, just gave you the full set of rules for that, and with identifying trend the way we talked about in this video, if you take and test this through historical data on a different time frame, on this time frame, on different charts, on this chart, and then you optimize those strategies, you optimize those for the best currency pairs using the rules you've created, then you can really start seeing results. That's the part of trading most traders never make it to, and that's the reason there's such a high failure rate in this industry. So I'm pleading to you, take this information, use it, not in your trading specifically right now. Use it, test it, make sure it works. Find strategies that work with it. Find the best candlestick entry patterns that work with this type of analysis. Learn to be a true, pure price action professional trader. And if you need a little more help with that than what I've shown in this video, we do have the EAP Training Program, which is our flagship program. This program has helped thousands of traders around the world on their path to profitable trading. I'll post a few of their testimonials on the screen. If that's not something you're interested in, then that's totally fine. Just make sure you're subscribed here to be alerted when we come out with new educational content like this each and every week. Make sure to share this video. If you got value from it, make sure to click that like button for me, and I will talk to you in the next video.
Yeah.